Hey guys, welcome back to another video. I wanted to discuss something that has been on my mind here. This video will be very brief because I'm still traveling currently in Greece and we're headed back to Athens today. So, I've got bigger things to do here than talk about markets. That being said, do I really ever have anything bigger than markets to talk about? Probably not. So real quick, we're just going to go over some thoughts I had as I was looking at things yesterday, trying to figure out, where am I most wanting to be convicted or positioned right now? And I want to go over why I'm feeling pretty decisively neutral at this time. And the way I'm going to do this is, first of all, I'm just going to pull up the charts for just a second. I do have one position that's fairly active, which is my silver long position. I picked this up, the last few days, and silver's been doing quite well. It's been bouncing around a little bit. I actually added a little bit of size here recently, and I have a stop loss below the low. Now, let me go ahead and warn something. The Athens to Atlanta time difference is pretty horrendous. So by the time you guys see this video and the editor has gotten a chance to go through it all, it will have been many hours. So it's the middle of the night over there when I send this to them. So just for fair warning, there may be some delay between when you guys see this, but it's not really about the technical chart today. I want to discuss why I'm still feeling pretty neutral on the market at this time, as we've just seen the Fed cutting rates, but there's some kind of potholes along the way we need to discuss briefly. So I am long silver, that's one position, but if we take a look quickly at the S&P 500, we can see, the stock market on a daily chart is sitting near all-time highs, broken through these levels, and looks from a technical perspective very bullish, very strong. And the reason I think that upside may be limited here when taking a look at indices, and that perhaps they are due for a bit of a pullback, is because of the chart that I'm showing on the screen now. So Chandler, if we could zoom in on this table right here, just so I can make this point a little easier. I want to go through some of our economic readings. You guys know on this channel, we talk a lot about the macro. We talk about the economy. We talk about, what things are looking like. And when I look at this chart, this is one of my favorite current tools on the Edge Finder. I've been using this a lot in my own analysis. Basically, it breaks down all of the key metrics that we pay attention to so frequently on this channel into a single, easy to read chart. And we've even color coded the change column to show if it's bullish or bearish for the underlying asset that we're talking about. So in this case, we're talking about the S&P 500, but on the left, if we zoom over here for just a second, you can do the same study on things like gold and silver. If we want to pull that up, you can basically see how that performance looks, and again, how that relatively impacts those assets. But for a moment, we'll just discuss the stock market as a whole and just kind of general market sentiment. So as we look at this, we can go one by one, and what you'll get here is somewhat of a pretty neutral reading. So if we take a look at GDP growth, it's been better than forecast. Okay, that's pretty strong for the economy. But then what about manufacturing? Manufacturing has been less than expected in terms of forecast, so a little bit of weakness there. Same thing with services, right? The services industry, which is of course the bulk of the American economy. We're a services-based economy. You can see that has also missed expectations as of yesterday. Then we get into retail sales. Retail sales was better than forecasted. And then you've got CPI year over year, which is cooling off. But on the core CPI front, we still have a little bit of stickiness there. So you've got some red, you've got some blue, you've got jobs numbers added being less than what was forecasted. And finally, unemployment rate, though, actually did tick down. So my point at showing you this chart in depth is that we've got about, we can count them up, 1, 2, 3, 4 reds and 1, 2, 3, 4 blues. So an easy way to read this is that we've got 4 blues, 4 reds. We're sort of in limbo. We're sort of in the neutral camp. The question, however, is going forward, which way is this chart going to start leaning? Are we going to get a lot of blues here as the economy picks up off of rate cuts? Or are we going to get more reds as rate cuts perhaps were too late? Right now, I'm feeling very neutral and I don't have a strong opinion one way or the other, and I'm waiting for that to change. So I look at data for this very reason. I don't try and forecast what the market's going to do all the time. I try and react to what the data is actually coming in as. So from here, if we get a bunch of blue data points here, basically meaning the economy readings are stronger than anticipated, I'm probably going to lean more on the bullish side of stocks and looking to perhaps buy the dollar if I can find the right setups there. But if things start to weaken further from here and we see more red creep into this picture, I wouldn't be surprised if you saw a bit of a correction in the stock market, as it does sit at all-time highs currently. That being said, all-time highs are certainly not a reason to sell the stock market, because the market can continue to put in all-time highs over and over and over, as it's done for the last a few decades. So it's something to be careful about, right? We don't want to try and call the top here, but we do need to keep a close eye on the data, and that is what's going to guide my analysis going forward on things like the dollar, on things like gold and silver, etc. So just wanted to put that quick video out here. And last thing I will say is that although I am traveling, I'm still taking trades if I can find them. And if you'd like to get every trade notification sent directly to your phone through Discord, we actually have a Discord server where you can join and get access to those trades being sent each and every day by myself, Frank, and we also have Chris Pulver in the team. So if you guys would like some more information about that, we will leave links in the description down below to join our VIP Signal service. And also, if you have any questions, you can chat directly with a member of our team using the first link in the description down below. Thank you for watching and have a great rest of your day. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.